Well, as foreshadowed, housing has become a major battleground for the parties as record prices, an acute shortage of rental properties, and high interest rates combine to significantly reduce affordability. We know that on an international basis, household debt to income ratios in Australia are significantly higher than even New Zealand and Canada. Both have severe housing crises there. Well done, Australia. It's a direct result of 30 years of bad policy and over leverage. And weirdly, even now, according to IFM data, the surge in average loan sizes is behind the significant growth in Australian home prices. Now, the data shows that when you compare affordability to average prices, things are way off kilter, with debt-to-income ratios off the scale, especially for new borrowers. Some are now paying more than half their income to service a mortgage or rent. High tax takes, high interest rates, and high prices are simply not being offset by any rise in real incomes, even as inflation is still holding cost of living higher, and even if the rate of price growth is slowing. Today, I want to look at the latest data on new loans from the ABS in a release that has now gone from being monthly to quarterly. So data released this week covers the October to December quarter of 2024. Talk about lagged data. The RBA gross debt levels for January, by the way, reported a significant uplift, especially for investor loans. As I discussed in a recent post, is the RBA really all in for a rate cut in February? On the way to this analysis, though, we need to pause on the Treasurer's recent announcement that it will soon become easier for Australians with student loan debts to get a mortgage, after Treasurer Jim Chalmers instructed the Prudential Regulator to relax how HECS was treated when banks conduct mortgage serviceability tests. So we're seeing mortgage debt ballooning to the benefit of the banks. See CBA's recent results. And when interviewed conveniently, the CEO denied that growth in mortgage lending had any significant impact on house prices. But we, of course, know the strong credit impulse is one of the main drivers of home price growth, supported by greater demand from high migration, tax breaks for investors, many of whom are losing money on a cash flow basis, by the way, and also a lack of appropriate supply. Given the longer terms of new mortgages and the later age of people getting one, mortgage defined as a death pledge has never been truer. But then, do ordinary Australians who want a home have any choice but to play this game? No, frankly, because the game is rigged.